Welcome everyone to Vested Interest. This is Shane, and in this video, we will cover our portfolio update for the week. But before we get into that, I would like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to all of the subscribers to the channel. I really do appreciate it. The channel continues to grow because of people like you. And for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividends, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a weekly basis. I also do larger purchases if I have extra cash from a bonus or a side job, something along those lines. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't intend to have one. We all have enough to pay for, so it's free to see what I'm investing in. But if you would like to help me out, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below. I know a lot of you that watch the videos are not subscribed. Whenever I go to my YouTube metrics, it does show me that a lot of you out there are watching the videos have not hit that subscribe button. So go ahead and do that. Take a second that it takes to do that and help me out with the channel. And help us continue to grow. Click that notification bell down below so you're notified whenever we put out any new content. Along with this weekly portfolio update, I do a stock pick of the day video series Monday through Thursday whenever the market is open. I'll also have a video coming up here shortly as we're entering into another month. Yep, that's right, October's over, heading into November. So I'll cover the stocks I'm looking to buy as we enter into November. I do that at the beginning of every month. I also will do a recap on the previous month, so probably the first week of November or so, I'll do a recap covering everything that happened in the portfolio in the month of October for those of you who may have missed it, and just kind of gives you a recap of where the portfolio stands, what options we were paid, dividends we received, and the growth year over year from last year's month as well. Well, since we covered all that, I really do appreciate everyone who's taking the time to do that. And again, special thank you to the subscribers out there. So let's get back over to the channel. Oh, one last thing, watch time. Watching the videos to the end or watching the videos a little longer than you would normally does help out the channel as well. YouTube algorithm does use watch time as one of the metrics, as well as hitting that thumbs up button, hitting the subscribe button, hitting the notification bell, and drop a comment down below. Let me know what you think of the portfolio. Let me know what's going on in your portfolio. What are you buying? Did you receive any dividends? Are you any options? And if you are, what options plays are you running? Now let's get back to the video. And as you can see, no options this week. We did throw out 3 or 4 again, like we do all weeks, every week. The BABA play again did not hit. It's starting to drop again, so I think that was it. I went a little out of the money on the opposite end. Probably should have went down a little bit this week, but we stayed relatively conservative on these. We're trying to keep the positions while we're running options and collecting premium. So we're really conservative on these. Some weeks we don't get anything. Some weeks we really get hit very well, but this was not one of those weeks. So no options to discuss here. But it was a good week for dividends. So the first dividends started flowing in on the 21st here. As you can see, we received dividends from Nutrien, ticker NTR. Now, this is a foreign company. So as you can see here, I want to talk through this for a minute. I'm counting $88.99 in dividends. As you can see, we were actually paid $104.69 in dividends. But my brokerage account, I use Ally Bank for my brokerage account, they take the taxes out right away. So any of these foreign companies that I have in there, Nutrien is a Canadian company, Vale is another one that's a Brazilian company. So there are tax implications around this, around dividends in general, right? You're going to pay the dividends at the end of the year for any dividends you receive. Now, foreign companies, again, my brokerage takes the taxes out right away. If your brokerage does not, you need to understand that you are going to be responsible for paying those dividends. So I wanted to show that. Again, Nutrien actually paid us $104.69, but after my brokerage takes out the dividends, it left us $88.99, and that's what gets reinvested. So I'm only counting the $88.99, not the full $104.69 payout. So $88.99, and I do have the DRIP set, which means dividend reinvestment plan, which just means anytime a company pays out, this in this case Nutrien, out of the material sector, the $88.99 goes right back in and buys more shares of that same company. So we picked up 1.88425 more shares, which added an additional $4.00 $2.06 in passive income over the next calendar year. Now, we received more dividends on the 23rd, $167.03 total, and that was broken down between Comcast, ticker CMCSA, paid us, and that's out of the communication sector, and Cisco Systems, ticker CSCO, out of the information technology sector, paid us as well. And Comcast paid us $66.63, went right back in and picked up 1.60288 more shares. And Cisco paid us $90.10, which picked up 1.59526 more shares of Cisco. And this is really that dividend snowball in effect. Whenever you hear that, people say that compounded interest or the dividend snowball effect, this is what they're talking about. So I own shares of Cisco and Comcast. Those shares paid us dividends. Those dividends went back in and bought more shares, and the new shares add additional passive income. So they added $4.53 in passive income. So that is that dividend snowball effect. And again, if I don't add to Comcast and I don't add to Cisco, then that cumulative effect will keep on going regardless of whether I add any more capital. Obviously, if I add more capital, it'll go faster, but that's the dividend snowball in effect. And time is the hill that this snowball is rolling down. And last but certainly not least, we received more dividends on October 25th. We received $56.12 from Cisco Corp, and that ticker SYY is out of the consumer staples sector, and that $56.12 went right back in and picked up 0.75329 more shares of Cisco, which added an additional $1.53 in passive income, $1.53 more in passive income. And on to the new capital invested into the portfolio. We did on October 21st. This is whenever we jumped in and tried to run some options plays that didn't hit, but we also invested $1,092.58. And with those funds, we bought 6 more shares of Lam Research Corporation, ticker LRCX. This is out of the information technology sector. This is one that I've been building out for a few weeks now, newest position in the portfolio. I sold out of Bank of America, rolled most of those funds into Lam Research, picked up those shares at $72.68. Actually, I'm glad I jumped in at the beginning of the week because I think at the end of the week, this was up to $77 per share, so we got it a little cheaper. And we are still building out our Alphabet position, ticker GOOGL. Added 4 more shares there at $164.13. We've been getting shares regularly around the $162, $163, $164 range. I'm going to continue to add there. If it goes much higher than that, I might back off a little bit, but I would love it really to pull back. I think at one point in the week I could have got this around 162, a little cheaper, but when we jumped in on Monday, it was at 164. So I'm comfortable adding there, but like I said, much higher than that, I'll probably back off and just continue with Lam and some other positions that have pulled back recently. But these new shares here added an additional $8.72 in passive income. Obviously, these are very low payers here, very low dividend yield on both of these. Hopefully, they have very nice dividend growth. I know Lam does. Alphabet hasn't announced their first dividend raise yet, but we'll see. I'm hoping for double-digit dividend raises on this one. We'll see how it shakes out. And we weren't done. We went back in on the 25th Friday here, added an additional $494.43. We added 5 more shares of Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector. Picked up those shares at $24.28. This is another one I'll probably add to if it stays down here in the $24 range or lower. 5-10 shares a week. I wouldn't mind adding to this position. It's one of my smaller positions. Nice dividend payer, nice dividend growth on this one, though it will be impacted if we have any sort of slowdown, being that it's out of the consumer discretionary sector, right? A lot of people won't be buying new furniture if we have a slowdown, but that's just the nature of it. Whenever those slowdowns occur, that's whenever you want to pick up cyclical companies like this. And these next 2 are the ETFs, part of our weekly buys. We will be buying 1 share of the Vanguard Total Stock Market ETF, ticker VTI, added that 1 share at $287.82. And 3 shares, they did a dividend split here recently, reverse split, right? So for every 1 share, you got 3 shares. So we were buying 1 share of Schwab Strategic Dividend Growth ETF per week before. Now, after the dividend split, we're going to go with 3. So we picked up those 3 shares of ticker SCHD at $28.41. And these new additions added an additional $13.07 in passive income. Total invested for the week, $1,587.01. and total passive income added with the new positions or with the new funds added and the positions they picked up, as well as the dividends paid out. Not a big jump here, $23.82 on the week, but a lot of these were very low payers, right? Even I think HVAT being the largest dividend payer here as far as yield, and we only picked up 5 shares with $121. So really, the majority of it went to low payers here. VTI has a low dividend yield. Even SCHD is, I mean, it's not low, but it's only at about 3.4, 3.5% dividend yield right now, and we only picked up 3 shares, right? $85.22 isn't going to pack much of a punch when you add over $1,700 in dividends or in new capital plus dividends paid out. So $23.82. We'll take every penny. And over here, we're going to jump in and look at the sector weight updates here. Communications makes up 10.41% of the portfolio. Consumer discretionary at 5.08%. Consumer staples makes up 9.33% of the pie. Energy sitting at 5.8%. Financials, the smallest sliver here at 2.65%, though SCHD is heavy in financials, so I'm not as concerned. And I am watching a couple companies like Visa, MasterCard, American Express. I would like to add one of those, if not all 3 over time, but we'll see. If one of them was to get a big pullback, I would probably, use that opportunity to add one of them to the portfolio. Healthcare still makes up the biggest slice of the pie, though some of these others are going to be overtaking it, technology being one here pretty quickly. Healthcare makes up 13.32%. Industrials at 6.45%. Technology is in second place at 12.13%. Materials makes up 8.55%. Utilities at 9% of the portfolio. REITs and real estate makes up 9.08%. And ETFs, if you've been watching for a while, as we've grown this one is starting to become a larger position. Eventually, this will overtake the entire portfolio just by the nature of contributing every week to those 2 ETFs, Schwab, SCHD, and Vanguard Total Stock Market, VTI. So eventually, ETFs will be the largest slice of the pie here. Over here on the right, as you can see, these are the sector weights that match up to the pie, as well as the dollar amount allocated to each as well. And here it is. I show this every week. Again, I like to be transparent as possible so that you can see a real portfolio built out over time. Some of you out there may have just started dividend growth investing or investing in general. Some of you may be on the fence, haven't taken the plunge yet. And some of you, maybe you've been investing for a while and things just aren't going the way that you want. Maybe you're seeing some red in your portfolio and you're freaking out. I need to sell. Well, if you've done your due diligence, and what you're buying are good companies. They're still growing. Their margins are expanding. Their revenue is expanding. Nothing's changed with the business. And you see red, those are buying opportunities. Warren Buffett famously said, if you can't handle a 50% drop in a stock, you shouldn't be in the stock market. So you may see red from time to time. That's all right. Don't panic. Don't sell out of the company. Go do a little bit more review on it. Make sure it still meets the metrics that you set up initially. Make sure something fundamentally hasn't changed with the company. And if it's still the same good company that you bought, growing over time, growing its dividend over time, none of the fundamentals with the company have changed, use those downturns as buying opportunities. Decrease your cost basis, increase your yield, increase your future potential growth. And that's what this channel is all about. Again, I think it's important for people to see a real portfolio built out over time from an average person. I don't have, again, no paid Patreon account. I'm not sending you into any other websites to sign up for or a mailing list to sign up for, any of that. It's free to see what I'm doing here. But again, if you'd like to help me out, go hit that thumbs up button down below, hit that notification bell, drop a comment down below, let me know what you think of the video, and most importantly, hit that subscribe button. Really appreciate everyone who's taking the time to do that. Now, here is all the positions in the portfolio right here in this column. Total shares as of the close of business on Friday, current price as of the close of business on Friday, market value as of the close of business on Friday, average cost per share. Now, this is my average price per share, right? This does include reinvested dividends. Purchase price, again, this does include reinvested dividends. So this is what I have into each position. Total return, whether I'm up or down, I'm going to show it. You can see it here. Obviously, the ones in red mean I'm down, and I look at those as the opportunities, right? These are down, so I can add to these, bring down my cost basis. And some of them I'll be adding to. I don't think I'll really add to CVS. I've got a pretty large position there. I may nibble a little bit. But this one, HVT, like we talked about, I wouldn't mind adding there. It's down, closed the week at 23.68. I bought it in the 24 range, so wouldn't mind adding there. KHC, wouldn't mind adding a little bit there. LRCX, while I'm building that out, I definitely don't mind it being in the red. Again, by the end of the week, it was $77.68. So hopefully I still have some opportunity before it overtakes my average cost per share. Same thing here with Nutrien. We bought a few shares there. Wouldn't mind continuing to nibble there. Pfizer, same thing. And Vale, if you've been watching, this is one of the first weeks in a while we haven't added to the Vale position. So I see red. I see buying opportunities, right? Again, some of them maybe not adding as much because I have 15,000 already in the CVS. So it is one of my larger positions. I probably won't add a ton there. But some of these other ones definitely, and even ones that aren't, excuse me, in the red, like Google, I'm going to continue to add so long as it stays, around this 165 or lower. Did close out the week at 165.29, so hopefully I can get some more shares there before this one runs up. But let's continue on. Here's the percent return. Again, obviously, if you see green, that means I'm in the positive. The red means I'm in the negative. Each sector, each position falls in. What you saw on the previous page was the sector's overall percentages. What you'll see here are their percentages of the portfolio weighting each one. But let's wait to get there. Whether they're a quarterly, monthly, semi-annual payer here, and the highlighted in yellow are the dividends that have been raised already. Ally is still on a pause. I have not seen that they've raised their dividend. They haven't done so in a couple years. Same thing with Kraft Heinz. I knew whenever I bought it, they weren't raising their dividend. Google, we don't know yet. This is the first year they've paid dividends, so we'll see what their raises look like. OHI, I don't mind this one not raising their dividend. My yield is so high, 9.328%. I'd like them to raise it a little bit, but such a high dividend yield, I'm not concerned with it. AT&T, I knew when I bought it, they had just done a dividend split and cut their dividend. Or I'm sorry, not a dividend split. They'd done a spinoff and cut their dividend. So I knew this going in. Now, I'd like them to start growing that here in the future, but I'm not really anticipating it over the next couple of years while they get their balance sheet in order. Well, let's keep going here. Current dividend yield as of the close of business. My yield on cost here. Portfolio weighting, like I mentioned in the previous slide, we saw each sector weightings. This is each individual position weighting. I also do have a little bit of a rule here. I don't want any one position to be more than 10 to 15% of the portfolio, and I don't want any one sector outside of ETFs to be more than 20 to 25% of the portfolio. Estimated annual income in this column, what months the dividends are paid out, dividend growth year over year, and where it sits at 15% of a 52-week low. I know I've hammered on this one in every video, but this number here, I like to keep my average cost per share under where it sits at 15% of a 52-week low. Now, this will change over time, obviously, but this does give me kind of a benchmark to try to keep my average cost per share below. It doesn't mean that it's a hard rule, right? Example with Google, I've been adding to this one at 139.67 is where it sits at 15% of a 52-week low. Obviously, it's well above that, but I'm continuing to add. So this is not a hard and fast rule. It's not written in stone. All right, quick run through here. Total shares, 6,132.433 shares. Market value of the portfolio, $310,241.01. Purchase price, what I have into the portfolio, $281,455.87. Again, this does include reinvested dividends. Total return, I am up $28,785.14. Nice to see. Not what I focus on. I am up 10.23%. Not what I focus on. You've seen me in the negative and say the same thing. So it doesn't mean just because it's positive then I'm discounting this. I don't focus on it. It's not my main focus. It's nice to see, but it's not my main focus. Current yield, 3.864% of the for the overall portfolio. My yield on cost, 4.259% of the portfolio. And this, the reason it is circled in red over here, this is what I'm focused on. The dividends paid out by all the positions in the portfolio, and it continues to grow week over week, month over month, quarter over quarter, year over year as I add new capital, as the positions in the portfolio pay out dividends, as those dividends buy more shares of those same companies, and then rinse and repeat as they pay out more dividends later, buy more shares, and continue that dividend snowball. It sits at $11,987.04, and we will be over the $1,000 a month mark next week. Very close this week. We didn't quite get there, but we definitely will bust over this next week and get to that $12,000 mark or $1,000 a month in dividends. Dividend growth year over year currently sits at 6.24%. Again, this will change over time as these companies adjust their dividend payouts. I'll adjust their percentages, which will adjust this as well. Well, that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and drop a comment down below. Let me know what you think of the portfolio, of the positions we added this week. What are you adding to your portfolio? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, drop those comments down below. Let me know what you think. Were you any options this week? What dividends were you paid out, if any, and what positions did you add to your portfolio? Look forward to reading those comments. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't money to never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of the certified financial advisor.